Question from Reggie Vincent. So, what is a defensive strategy recommended now that all asset classes are falling? Any thoughts on that, Bill? What's a good strategy for defense in this kind of crisis we're in?
Okay, so this is a good question. So I would say defense has a couple different parts. One, you have to hold physical fiat. Even though it's going to carry the virus, you just have to have physical fiat in the event that everybody goes to an ATM machine at once because credit cards get shut down. So you've got to hold physical fiat.
So like cash under a mattress type fiat?
Right.
Like physical.
Right. Yeah.
Okay.
You got to have cash under a mattress as much as we're crypto guys. You've got to have a price in mind where you're going to say, okay, I'm committing resources to crypto at this level, right? And if it drops, right? If it's just ridiculous, you're going to say, I'm committing at this level. Okay. And then I think you're going to have to start sifting through equities to try to find something that will perform well in this environment. Maybe it's too late. Okay. I also think commodities now has a new meaning. Now, I know we joke about this stuff, but it's not a joke anymore. Beef jerky, ammo, milk, eggs. I mean, you're not going to go buy like a freezer, right? Like these consumer goods are going to be used. And here's another economics word, barter. You have to get ready for barter. Like I'll trade you beef jerky for toilet paper, right? This is like you're going to have to invest in this. Right. Or it's just barter, right? It's just like something else becomes money. Like the joke on the internet now, it's toilet paper, right? Now that's just ridiculous. You can't eat or defend yourself in a 90-day or 120-day quarantine with toilet paper, right? The National Guard will be handing that out. Okay. So diversification is, cash, a level where you're going to commit to crypto and just say, this is where I'm in. And if it goes to zero, that's it. There's got to be something in the stock market. And I think you got to have physical goods. You got to have stuff.
Right. Okay. I mean, to share my perspective, I think obviously these are just our opinions, not financial advice. I think in times like this, I think people should be aggressive but cautious, because obviously we're now in a bear market in equities. Crypto has been in a bear market, especially with altcoins, for the last few years. But looking at all the entire investing space, all capital markets, I think now is the time to really be greedy, right? I mean, the famous quote by Buffett: "Be greedy when others are fearful." And I think everybody now is fearful. So this is the time. If you've ever been waiting for a bargain, and whether it's in crypto or in stocks or anything, or even real estate, I think in the next few years or so, because I think a recession typically lasts 1 to 2 years or so. So I would say in the next 1 to 2 years, assuming everything plays out and we're heading towards really rough times, and if things do get chaotic with the coronavirus, everybody's going to be selling everything. So you could get the deals of a lifetime in the next few months to the next 1 to 2 years. So, but to take advantage of those deals, you have to have capital, whether cash or something else, ready to deploy for those opportunities, right? If somebody says, hey, you know what? All this is going to zero. I want to sell my BTC at $100, and that's a deal of a lifetime. You have to have the money to buy up as much as you can. But obviously, nobody can really call the bottom, and people are sometimes afraid of catching falling knives. So I think the general strategy is, as opposed to trying to predict where the bottom is to almost have a dollar cost average strategy. So don't buy everything at once, because things could go lower. So I think a good defensive strategy could be dollar cost averaging during the dips of a recession or bear market. And then this assumes that you believe there's intrinsic value in whatever you're buying, whether it's crypto, Bitcoin, whether it's stocks or something else, whatever you're buying, if you've done your research and you think it's valuable, so from a value investing perspective, you think it's going to bounce back, then I think it makes sense to buy the dips, but have a strategy around it. Don't just buy everything at once. Now, in terms of other asset classes, I definitely do think it makes sense to diversify. Uh, I know some people don't like to diversify, but unless you're a professional investor who knows what you're doing and has done extensive amount of research in one particular investment, I think the average person should definitely diversify. Now, whether that's gold or commodities or anything else, that's really out of my expertise. But I mean, gold has fared pretty well. Do you own any gold, Bill, or do you plan to buy any gold?
You know what? I'm not really a precious metals guy. I mean, in a real apocalyptic scenario, central banks could do what they did in the Depression and, just simply say, we're shutting down the gold markets and the central banks are taking everybody's gold at $5,000 an ounce.
Right.
They just, if you read Jim Rickard's book, that's what he basically thinks is going to happen, right? They're going to have to rearrange the fiat system. They're going to take everyone's gold and they're going to give you $5,000 an ounce for it. So is that bullish gold? Yes, that's super bullish gold, but you ain't paying it if they won't take paper, they're not going to take metal at the grocery store. They're just not, right? They might take crypto, right? I mean, but they're not taking precious metals. So precious metals has an investment case. Oil has an investment case at certain levels, but I don't know that they have a use case.
Yeah. Now thinking of it, I mean, if we kind of, this is just kind of exaggerating things a bit, but if we're going towards like Armageddon, I mean, I don't think we're going towards that. I think everything will just kind of blow over, but nobody knows when exactly it's going to blow over, whether it's a few months or 1 year. But worst case, so let's say I think stress test every kind of investment and holding you have and look at all kinds of risks and see how it will impact those investments. So not just crypto, but everything. So let's say cash, right? So let's say you have fiat in banks. If banks get bank runs, or if, God forbid, the government goes in and takes some money from your bank account, are you protected from that, right? If what happened in Cyprus happens in America or Europe or some other countries in the developed world, are you able to stomach that? So, I mean, yes, here in America, we have the FDIC insurance, which says that $250K is insured. But what if that goes to, what if that's canceled? All right. So I think stress test everything you have. Don't have too much in one thing. As Bill said, I think maybe having some cash in the house, some maybe if you have money in one bank account, maybe spread that over several different banks. So maybe if one goes under, or if,
right, just like a crypto exchange. I mean,
right.
The Fed does its stress tests, assuming VIX is at 70. When the Fed was, like, you could Google this, when the Fed was doing all this like ceremonial stress testing, they would stress how will the banking system do with VIX at 70. VIX is a equity market volatility index, right?
Mm-hmm.
So VIX was 50 something before it came off. So, if there's a problem with the banking system, then you're going to want to have some cash. You're not going to want to have to go to a bank branch or an ATM to get it. And then, you're going to want to have crypto. You're going to have, what you're hodling. And then you're going to have a level in your mind that says, okay, at this level, I'm deploying capital.
Yeah. I mean, so I think some crypto, some fiat across different banks, maybe even some gold or metals. I mean, I personally haven't bought any, but I mean, I can definitely see why some people would buy gold bars, because
right. Actually, the guys I know who are buying it all along have been buying 1 ounce coins. Just FYI, because that's like the preferred unit, and they buy the coins out of Australia because it's like one of the best mints out there, and the tax structure, there's no taxes for buying and selling. U.S. coins, FYI, they're made for durability, but they're not the purest gold out there. Now they may have a use because you may need to use them to pay for things, but just a little FYI on gold, and don't get talked into bars or 2-ounce coins or anything like that.
All right. Well, let us know what your strategy is in times like this. What's a good defensive strategy? Let us know in the comments down below.